Hey, what's going on, y'all? It's your boy Chike Investing back here with another video. We're going to be going over something pretty interesting today. So we're going to be reviewing the daily profile here on a Friday at the end of the week. And in particular, I want to give you guys a secret tip on how to anticipate really trash PM action, and also, expansive AM action as well. We're going to be going over that. There is a couple of handy things that you could have noticed to anticipate the right bias going into AM and PM. And, the reason why you want to understand bias is because bias is going to help you understand, or it's going to help you be way more profitable on your trading entries. Okay. So we're going to be going over that. We'll also go over the ICT22 model, how you could have used that particular trading entry strategy to make profit today. And if that sounds pretty good to you, press that like button. You can press it right now, and also press that subscribe button and that notification bell so you don't miss a single video. We do these videos daily. Thanks for watching so far, and we're gonna get right into the video. I don't want to waste too much time here. So, sort of the daily profile. All right. So, what happened going into the morning? We take out the previous day low. You see that here? We took out the previous day low, and we came into this daily buy side imbalance, sell side inefficiency, right? So this is what we call a fair value gap. It's essentially a gap in between two candles, right? So this candle's high to this candle's low right here. You can see it's all body. That is a gap that price will typically refer back to and then expand away per ICT's teaching. And so you can see we just shallowly took out the previous day low right here, and it started immediately breaking higher to go through the day. And because we were bullish, it's an election year, right? It's very obvious that price is going to continue to go higher because in an election year, typically the presidency wants to end off, the equity market, being up. So there can be a lot of manipulation to go higher, even when you think that there should be, retracements, and all the signs are pointing towards that. A lot of time, it'll be really easy to catch longs. ES as well has been going up for a long time, and we're in a much higher position in ES, relative to this high than we are on NQ. And so NQ is basically telling, this, it's more of a six sister mode where it's catching up to ES's moves. So we could also anticipate that price was going to be bullish, okay, on the higher time frame. Now we do a top-down analysis on this channel, because I want you guys to understand, what's going on in the higher time frame. Because on the higher time frame, we'll trump what's going on in the lower time frame, right? So if you're entering trades on a 1 minute, 5 minute, 15 minutes, it's very important to understand what's going on in the daily, 4 hour, 1 hour. And so that's why we're going to quickly go over these time frames, and then we'll get into what I talked about, at the beginning of this video. So let's go from the daily profile. So this is what happened. We ended up taking out the previous day high, and we closed above it. Okay, so now let's go on the 4 hour. So on the 4 hour over here, overnight during Thursdays, or yeah, overnight, you can see over these past two candles, we had a pretty inactive London and AM session, London and Asian session. So you can see in Asian, we actually dipped below the previous day low here, and then ended up running higher going into the AM, and overnight we consolidated. That's why we had a pretty expansive AM. So I've now given you guys two things as to why we had an expansive day, right? Or two major things. We dipped into that daily fair value gap below here, right here on this candle, as well as having a pretty inactive overnight. Asian and London was not active, so that makes it very likely that the AM session will have an expansion towards the direction that you would like price to go to. Okay. Now on the 4 hour, we did have this short-term pullback, returning back to this rejection candle, and then in the AM had a small Judah swing on this 4 hour and then expanded higher, closing over this previous day high, making it pretty clear to me that the next couple hours going into the PM is probably going to be bullish as well. We had a small pullback here on this PM candle. Hopefully I'd like to see a return back into this 4 hour fair value gap, in the next week or so to continue higher, or if we keep it open, we're probably going to be expanding for a while. Now on the 1 hour, what do we have? So we had a Asian session, Asian London session that wasn't very active, came back lower, took out the Asian low right here. We did not take out this low because this is the low coming back into the daily fair value gap. So we really don't need to go back there, especially if we're really bullish again. So when I see us taking out this Asian low, and we're still inside this 4 hour fair value gap, it's somewhere over here. This is a 4 hour fair value gap that I have drawn on this chart. You can just briefly see that. So it's from here. You can see price has really not moved away from it, so it's still being respected. Something I teach on this channel is if you want to see a fair value gap that's not being respected, typically it'll trade through it, and then the next couple of candles should expand away. But if we're mohawking, right? If we're closing outside of it, but then come back in the range, right? We're closing outside of it, but come back, then it's actually still supporting it. It's just a mohawk. Okay, so price takes out this Asian low, and then we break work structure higher. Have a short-term purge liquidity right here at that NFP 830, taking out a short-term low, but this is what you call a continuation purge, right? So basically it's a purge that happens, to take out some short-term liquidity so it can continue in the same direction, right? And so, some people call this an FU candle because it wants to go in the right direction, but it's going to stop you out. So that's why you got to be pretty careful when you're trading around news, especially NFP. Price fills in this 1 hour fair value gap, so you can see in that NFP it touched that fair value gap and then comes back lower. But then the bullish is long, and price kept going higher. Here's another trick that I would have also known that we're going to have a bullish bias. So if you actually look at, I believe, at this low right here, it didn't take out this low, but on ES, this low took out that low, right? So that's SMT with NQ. So if I'm seeing SMT on the 1 hour, what does that mean on 15, 5-minute, 1 minute? It means for the rest of that session, it's likely to be bullish because 1 hour candles, when we're seeing an SMT, the next couple candles are going to be bullish. So that's telling me that on lower time frames, I can really be finding really, really good longs that really expand. Okay. So what happened? We had this short-term takeout. We expanded higher above the previous day high. We closed above it. If we had wicked and came lower, then I wouldn't have expected us to be as bullish as I would have thought. But it's confirming that SMT when we close above this previous day high, because it's telling you, yeah, I'm really bullish, right? And then price creates this 1 hour fair value gap. We wick back into it at around 11 a.m. and then expand higher, forming the high of the day here at 1 o'clock at the end of the lunch hour. But then consolidated for us at the PM. So I'm going to be talking about now why the Friday, why PM session can be pretty trash. So look at how, small of a volume these candles are compared to the AM. The AM, we had a large expansion, right? Because of that SMT on the 1 hour, because we tipped into that daily fair value gap over here. Okay. And on ES, we dipped into that fair value gap again as well. So that's also like propelling us higher on ES. ES is daily fair value gap, right? And so we're propelling higher. We had a relatively, like a lackadaisical overnight. So when you have a very large expansion AM, expect the PM to be trash. And especially on a Friday, and especially on a Friday PM where we've expanded all week, right? There's not that much juice left in the market. People have made money. People are going home, right? They don't need to trade on Friday PM. Okay. Banks are going home. Wall Street traders are going home. Not going to be that much volume, right? There's not that many people to manipulate, not that many orders to manipulate. So the algorithm is not going to move price that much, right? People are logging off. And so you can just anticipate that Friday PM price action is going to be pretty trash. So this is not ideal. Once we've reached a couple higher time frame targets and it's not pretty obvious for where price is going to go, you should just close your charts, right? Come back next week. And that's a mistake I made today. And I'm speaking to myself as well because I, lost a little bit of money today, and I would have, that's because I missed this expansion and I started not revenge trading, but I felt FOMO and I wanted to continue to take a trade, but I shouldn't have, right? I should have just acknowledged that price is done for the week, and I can come back next week and make more money, right? So let's go over the 15-minute time frame here. So 15-minute time frame, we had a short-term purge right here, coming back into this old new day opening gap. Bouncing in between a couple PD arrays right here. And then at 9:30, we left this opening range gap open, which is today's opening range gap. What's the opening range gap? If you click to regular trading hours, it is the gap between yesterday's close and today's open, right? That is similar to a fair value gap in the sense that it's an inefficiency, right? And you can use that to give you a certain bias. So if that stays open, think about what we're talking about with breakaway gaps. If the gap stays open, then that means price is likely to break away, right? And so this gap stayed open. We did not show a willingness to fill it in the first 30 minutes of the trading session. And we have clear targets for liquidity higher, this previous day high here, this 15-minute inefficiency, this 4 hour fair value gap that's right here as well. So, and plus we have 1 hour SMT. So I already know that we're pretty bullish. And if this opening range gap stays open, right, then you can be pretty confident price is going to continue to go higher. So I actually missed that 1 hour SMT, and that's the reason why I missed this expansion trade. But just gotta stay focused and always do your full review in the morning, right? That's how you forget that. That's how you don't miss that. Always check for SMT on the higher time frames, right? So price expands, ends up closing above the previous day high about 9:45, and then you can see that once it hits about 10 o'clock, especially when 9:30 has a big move like this and we've hit our targets, once it hits about 10 o'clock, you can see price just start to consolidate. Typically you want to trade in these kind of conditions only at the macro times, or you can see around here, we dip back into this 15-minute fair value gap around that 1050 to 1110 macro, and then continue to expand higher. But although the precision in and the speed with which it does that is really really falling off, right? Especially because we're heading into basically lunch hour, going into the PM on a Friday after a very large expansion move all week, and we had a pretty large expansion hitting the final target, right? Previous day high from yesterday for the week. Like we're done, right? And price just continues to consolidate. We did have this 15-minute fair value gap that got closed through, right? But then, this is really, price is not really telling you it's ready to use it as an inversion fair value gap because we didn't expand away, right? We just teetered around and came back to it, filled this 15-minute inefficiency, and then by 3 to 4 o'clock we made another high, but we could not take out this intraday high from 115, right? So we're pretty much just consolidating around. On the 5-minute, we take out the short-term low, right? Not revisiting the previous day low right here. Break market structure higher. Create this 5-minute fair value gap. Consolidate around it, right? So this is actually a data low. This is NFP data low, right? This is the data high. You see we take out the data high, so I would have liked to see price come back lower and take out this data low. But because we had that 1 hour SMT, it didn't do that, right? And that's something that I would have, if I had the right bias, I would have totally caught that. Going into 9:30, we opened this. We let this opening range gap open, expanded higher, right? And then by about 10 o'clock, you can see precision starts to fall off. Consolidate, come back to this 15-minute fair value gap here at 11:10, expand higher, and kind of gyrate until about 12:30. Where in between that 12:20 and 12:30 macro, if we've been consolidating for a while, we could start moving higher, which we did. Made another high around 120, and then created a propellant order block here at 2 o'clock, came back lower, taking out, we didn't even take out the lunch low, right? But we kind of just gyrate around until about 4 o'clock. Okay, so let's go on the 1 minute, see if we find anything interesting here. So I'm going to go over a few 22 model trades. So I've kind of gone over I've gone over, why PM session was trash. I've gone over AM session, why it was bullish. Now let's go over 22 model and how you could actually, trade these things. Because at the end of the day, what's the point talking about all this if you're not going to make any money? So the 22 model, right, is when you have a high, low, and let's say this is a low right here. So we purge this low, take out the liquidity, go higher, and break market structure above this high. And there must be a fair value gap in that move. Must be a gap. And the price either returns back to that gap, or it may stop at something here on the left, which could be a breaker or an inversion fair value gap, and price transcends higher, right? So that is the entry model, and I will be showing you examples about that. And let's start here at the 9:30 open, right? So we've gone over, what we thought was going to happen throughout the day. So let's just say I was targeting this data low, right? And we hit this new day opening gap from today. And, I wanted to see price go lower and fill this opening range gap and take out this data low right here. But, the reason why we didn't do that is because of all the things that I mentioned before and why we're going to have a bullish AM. Okay. And this is something that I just did not realize real time. I thought we could have a Judas swing going to 9:30. I was bullish long term, but I wanted to see us have a Judas swing coming into 9:30. Okay. Let's take out this. Let's take this off. So we have this high right here, a low, higher high above this high, and break of market structure lower, fair value gap. We return back to that fair value gap. I entered right here on this fair value gap. And, I thought that price, after rejecting from that fair value gap like that really well, I wanted to see it run lower. But you can see the next candle expanded higher. So what did I do to hedge my loss? When I see price reject lower like this and leave this wick, I don't want to see this wick broken through, right? Very likely that it's going to stop you out. So I typically move my stop. Instead of, my stop would be above here, above this high, or above this breaker move right here. And I keep it above here or above this candle. It's high right here, above the last fair value gap candle's high. Plus you have this new day opening gap low. So I kept it above here. But then I moved it to the high of this candle once we moved away. And ideally, price shouldn't have really even gone up against the consequent encroachment of this candle, like much above it. So I could have even set my stop loss maybe above this volume imbalance or above this, FEG right here. And, hedge against my loss. Price did stop me out at it, not a full loss, but a partial loss, right? And then it expanded higher. At this point, you should be shifting. You should be thinking about, am I on the right side of bias, right? Because look at this. We have kind of this trend line move, right? Where price is making all these lower highs, right? So, oh, sorry, higher lows. So low right here, higher low than this low, higher low than this low, higher low than this low, higher low than this low. Typically, this is like a trend line for retail traders. Price took out liquidity under this, what people will call a breakout. So faking out people who have sell stops below here, forcing them to, go short. But then that actually creates liquidity for people, for smart money who really wants the long. Okay. So it actually ends up reversing, breaking market structure above this high. Fair value gap, very tiny right here. Okay. So you got to train your eyes to see these things. Fair value gap in between these two candles. Okay. You have this low, lower low right here, breaking market structure above this high, plus a fair value gap. That's the 22 model. Now, where would I have entered? Because we closed above this high, my entry would be at this high. Otherwise, I could have set my stop loss, I set my entry at this fair value gap. But sometimes when price is really bullish, especially when you have SMT on higher time frames, you're going to see gaps stay open because think about it. SMT is typically trying to break away, right? It's trying to go somewhere fast when you have SMT that's really valid. So in order to do that and promote that kind of pricing, it's going to need to leave gaps open. So I'm anticipating that gap to stay open. So you can set your entry at this high. Sometimes I'd set it at this breaker right here. But just based on how we're moving today, just didn't think we could get that. Plus, you have this volume balance right here. So honestly, you could have set your stop my entry just around that, above the high of that volume balance, or this it could have been either one. I maybe just get a better R to R if I set at this volume balance, because maybe at least that volume balance to get filled. And I set my stop loss below this breaker candle right here. What would I do? I'd aim for the previous day high, right? Because I know that's likely going to get taken out. That's at least a 1 to 4 right there, right? And I didn't take that because honestly, we had these 15-minute fair value gaps and 4-hour fair value gaps in the way, and it's around the 9:30 open. I already got burnt here, and I was like, there's going to be other trades in the day. I don't really feel comfortable switching my bias yet because I'm not that confident. I wasn't that confident in the moment, which I really should have been more. Especially if I'd seen that SMT, I would have been way more confident. So, and that's just honestly, I just had the wrong bias. I'm just gonna be honest with myself. I didn't notice, the purge below this trend line and this obvious high right here, this high right here. I just didn't notice that. I wasn't thinking about it. It happened so fast, right? These are 1-minute candles. Price makes it above this new day opening gap. We kind of have high resistance going through these inefficiencies right here, this 4-hour and 15-minute fair value gap. We eventually get higher, close above the previous day high, and then starting here around this 950 macro, we kick off just a bunch of high resistance trading, right, where we consolidate above the previous day high. And then it's not really until, so we have this move right here, this low, high, right? Let's get a little closer. Low, high, lower low, okay? And then we have this high right here and this fair value gap. So technically this is a 22 model. But why would I not take this? I wouldn't take this because there's a 15-minute fair value gap below here, right? Right? There's a 15-minute fair value gap from here. And I'm thinking we could return to that at the very minimum. So I am not interested in buying any 22 model. If anything, I'm looking for shorts, right, to come back into this 15-minute fair value gap. And so we finally get that around 11:13. And then, I'm still bullish for the day, just given that, I'm already anticipating this to be a bullish candle because that 1-hour SMT, and the fact of just everything else that's going on. So we have this low, high, lower low, and breaking market structure above this high. But because this is large fair value gap right here, there's a breaker candle right here as well. And we just wicked over the high and came back in. And we've already had a really large expansive AM. By 11:30, 11 o'clock, I'm expecting the quality of the price action to, either to be really good or to fall off completely. And this is not great price action. So I was not interested in taking this long. And, even if I did, check the R to R, wouldn't have even been great. Let's say I entered at this fair value gap and then aim for this high. My stop loss could have been maybe below this series of inversion fair value gaps right here. And this gap's low. But that's a 1 to 2, and I don't know. I just wasn't interested in taking it, especially when we have these kind of conditions. I'd like to trade at the last 10 minutes or the first 10 minutes of the hour, because that's where you can see a lot of really good moves. So I didn't take that. We do have another one that forms here: low, high, lower low, and then break a market structure, fair value gap, you go higher. But, you know, because we're now heading into lunch session on a Friday and PM session as well, like I'm not anticipating there to be any great trades. So really should just close my charts. We do have this 22 model that did form here at the 150 to 210 macro. But so this low right here, this high, low, higher high, above this high, taking out this high and this high. Breaking market structure lower, fair value gap. We're in such a premium, and we have LRRs here and here, right? We have the lunch low that's around here as well. And, you know, if we're bullish, I have a bullish day, I was thinking that we could take out the lunch low. And plus we did have a 4-hour fair value gap that formed, right? So look, the 4-hour fair value gap starts here at 2 o'clock. So that trade was at the 150 to 210 macro. So I saw this 4-hour fair value gap form. So I was like, okay, we could probably return back there to fill that inefficiency if we have a break of market structure on a lower time frame, which we did. Plus it's at a macro time and we're in a premium and we have short-term, you know, legs of liquidity as well. So I thought this is a really good trade. We took out ERL right here as well, which is external range liquidity, which is a high to the left. And so my entry, ideally, once we close through this low, right? I said sometimes it's not going to return back to the fair value gap. Now, admittedly, I was in a meeting, so I didn't even, you know, stay true to my own word, which is, you know, I set my entry at the fair value gap because I was in a meeting and I wasn't really focusing. But I didn't really notice that we closed below this low on this candle, right? So I'm anticipating that could leave this gap open. And so, you know, I could have aimed for at least a 1 to 3, maybe aim for that 4-hour fair value gap that was there lower and take out most of my trade at that 1 to 3. And if I had gotten in at this low, that would have been a fantastic trade. But unfortunately, I didn't get that. And so, you know, I ended up waiting until this particular candle here, high, lower low, higher high, low, below this low, returning to the fair value gap. We break market structure lower, but then I get stopped out once I move my stop here. And because I'm still aiming for that 4-hour fair value gap below. And then we just go higher. And, you know, maybe I could have taken a long here, low, higher high, sorry, low, high, lower low, taking out this low as well and going here. There's no fair value gaps in here, right? So that's not a 22 model. And, you know, it's a Friday PM and, you know, I can see the precision and price action is falling off like these very choppy, small candles. And it's Friday PM and I'm thinking we already had an AM that's expansive. So didn't want to take any more trades after this one at 2:30 and just left it alone because honestly, this is pretty trash. So thank God I did. But yeah, hopefully this has been educational and informative. If you like this video, press the like button and leave a comment below and make sure that you like and subscribe and put that notification bell on. Thanks for watching. See you guys in the next video.